Namaste students. So today let us start with the dissolution of the partnership firm with some new concepts. Yesterday we discussed how to treat various assets and liabilities. We discussed about its treatment in realization account. We discussed what all journal entries we have to pass if we want to transfer any asset to realization or if we want to make payment of any liability. I told you yesterday also that as per section 48 of Indian Partnership Act 1932, we are going to discuss the treatment of dissolution of a firm. I told you about the sequence also, that first of all we have to make payment of outside liabilities, then we have to make payment of partner's loan if there is any loan given to you in the question, and then we have to make partner's capital account. So today let me tell you in brief about it. First of all, we make payment of outside liabilities which are given on the liability side of the balance sheet. How the question is going to come in the paper? One balance sheet will be given to you, followed by a few adjustments. Like same it is given in admission and retirement. From that balance sheet, you need to draw one realization account first of all. And then you have to make partner's loan account. Why are we making realization account? So that we can transfer all the assets in that account. We sell off those assets, and whatever money comes in the business from selling those assets, that money will be used for the payment of liabilities. Which kind of liabilities, girls? Especially I am talking about outside liabilities. I gave examples of outside liabilities also, like creditors, bills payable, any outstanding rent if it is there. So whatever third party liabilities that will be given to you in the question will be paid out of the money which we get after selling the goods and services. So now that we have done with the treatment of assets and liabilities, now come to the new topic for today. See, the first topic is treatment of goodwill in the books. See, when the firm is going to dissolve, the accounting treatment of goodwill is very simple. You'll be surprised to know this thing, that you have done so many concepts in admission, many concepts in retirement and death even. But the accounting treatment of the goodwill, which is the most complicated topic I should say, is very easy. Goodwill will be treated just like other assets. Other assets like plant, machinery, furniture, fixtures, the way we treat other assets, the same way we are going to treat the goodwill also. Because actually goodwill is an intangible asset only. Now suppose if goodwill is given to you on the asset side of the balance sheet. I'm just hoping for this. Suppose goodwill is given to you on the asset side of balance sheet. It means this is the case when goodwill already appearing in the books. When goodwill already appears in the book, this is that case. So in this case, what are you going to do? You are going to transfer the goodwill to realization account, the way you transferred other assets. Goodwill being an asset will have a debit balance. The moment you transfer the goodwill to realization account, you have to credit it, making its book value 0. This is the only accounting treatment. Just like other assets, you have to transfer goodwill into the realization account. Now, suppose if adjustment is given to you in the question. Adjustment is always given outside the balance sheet, as you know. So suppose if outside the balance sheet, it is mentioned that goodwill realized rupees 10,000. Let's say goodwill realized rupees 10,000. What do you mean by this statement? Goodwill realized means that when we have sold this goodwill in the market. Now you must be wondering that goodwill is an intangible asset. How can we sell it off? It's try to understand this concept. Suppose you are selling other assets in the market. Fine. Now if any outside party, if any of the customer would like to pay you high price for your assets. Like suppose the book value of any asset, let's say plant and machinery, is just rupees 1,70,000, and the outside party is ready to give you rupees 2 lakh. It means why he is paying you rupees 30,000 extra? Because of the goodwill of the firm. So it means you need not to get into the concept too much, because this concept is not going to come even. See, so suppose if in the adjustment it is mentioned that when goodwill is realized in cash, it means when you have sold off this goodwill in the market, you got cash from this, then entry would be simple. Cash account debited to realization account. As I told you the amount, let it be 10,000. Cash account debited to realization account 10,000. Now suppose if any partner says that as the business is going to wind up, now I'm going to start up my own business later on, but I want to use the name of the company in which I was working. Let me put it formally. Suppose I and Ram, we were into a partnership. Now we have decided to dissolve the firm. We want to discontinue the business operations. Ram said, I want to use the name of the company after its dissolution also. Fine. So in that case, what Ram has to do? Ram has to pay me the goodwill. Not me, rather Ram has to pay the amount of the goodwill to the firm. So what do you mean by this case? That if partner takes over the goodwill. Suppose if partner says that I want to take the goodwill of the firm, then in that case, the partner has to pay some money to the firm for taking over that goodwill. An entry is very clear. We did yesterday also, and I told you that we have to treat goodwill just like other assets. So when a partner takes a furniture, so you know what entry we passed yesterday? We passed the entry partner's capital account debited to realization. So same way, if the partner is interested in taking over the goodwill of the firm, then in that case he needs to pass the entry partner's capital account debited to realization. Because the treatment of goodwill will be same as that of the treatment of other assets. I repeat once again, when goodwill is already appearing in the books means when goodwill is given to you on the asset side of the balance sheet. It means goodwill is already appearing. Then you have to transfer the goodwill to realization account by passing this entry and by making its book value to 0. Now suppose if no goodwill is given to you on the asset side of balance sheet, then in that case don't pass any entry. If something is given to you in the adjustment that the partner is interested in taking over the goodwill, and taking over the goodwill means that he wants to use the name of the firm even after its dissolution, then in that case the partner has to pay some money to the firm. So what entry you are going to pass for taking over the goodwill? It's that partner's capital account debited to realization account. Now suppose you have sold off this goodwill in the market, and I told you the meaning of this thing also. But if you are selling off the goodwill in the market, then obviously you are getting cash out of it. Then entry would be cash account debited to realization account. So I hope the treatment of goodwill is clear to everybody, and it's this treatment only. There is no other entries, nothing. You have almost done a very tedious accounting process of goodwill in admission and retirement, but now it's the time to take to get a little relaxed, because the treatment of goodwill is very, very simple in case of retirement. So now students, let's move to the next topic, that is treatment of profits and reserves. You can see I have made a balance sheet in front of you. A balance sheet is there on the board. Just have a look on that. What all items I have written? General reserves, reserve fund, profit and loss account, employees provident fund, investment fluctuation fund, workmen compensation fund. Now you must be thinking, all these things we have already done in admission and retirement, then what's the new? Exactly, there is nothing new, excepting a few things. If general reserve is given to you on the liability side of the balance sheet, then simply transfer this general reserve to the partner's capital account. As reserves are the part of the profits and it belongs to partners only, so we have to transfer this reserve to partner's capital account the way we are transferring it in admission of a partner and retirement of a partner. An entry, you know it very well. Entry is general reserve account debited to the partners. Let's say there are two partners, then you will be passing the entry general reserve to A to B. And ratio is their old profit sharing ratio only. Fine. So as we are giving general reserve to A and B, so their account will be credited. Move to next. Reserve fund. The treatment of reserve fund is also same as that of treatment of general reserves. Again, you have to give this reserve to the partners only. So you will be passing the entry reserve fund to A to B. Nothing new. Now, profit and loss account, if appearing on the liability side, then you know it is a profit. If P&L account is appearing on the liability side of the balance sheet, it is a profit. So, the same entry will be passed like profit and loss account debited to A to B. As we are giving all these three things to the partners, so partners account will be credited. Fine. So, if it is general reserve, write general reserve to A to B. If it is reserve fund, write reserve fund debited to A to B. If it is P&L account, write profit and loss account debited to A to B. Next is employees provident fund. You know, employees provident fund is a third party liability. Means it is not the part of profits. So we can't give it to the partners. Rather, what we have to do, we have to transfer this employees provident fund to realization account, like we are transferring other liabilities. Fine. So, what journal entry you are going to pass for this? Entry will be employees provident fund account debited to realization account. Employees provident fund account debited to realization account. The reason is employees provident fund is an outside liability. It is a third party liability. Fine. This money belongs to employees of the firm. And the partners, they can't share this money among themselves. Fine, rather they have to give this money to the employees. So, entry would be employees provident fund account debited to realization account. Now come to investment fluctuation fund. You know, the treatment is little tricky in case of investment fluctuation fund. You have done a lot many cases if the value of the investment is equal to the market value, or the book value of the investment is less than the market value. And you have done different cases of IFF in admission and in retirement. But in case of dissolution, what you have to do? Investment fluctuation fund will be simply transferred to realization account. You are not going to distribute this fund among old partners the way you were doing in admission and retirement. Please make a note, students. Just write what I am telling you right now. It's better to always have a notebook with you. So just note it down. Investment fluctuation fund will not be transferred to partners capital account. It will not be given to the partners. Rather, what we have to do, we have to simply transfer this IFF to realization account. That's all. We just have to transfer it. Fine. Now I'll tell you the reason why we just have to transfer it only. See, suppose the investment which is lying on the asset side of the balance sheet, its book value is 5 lakh. Got it? When you are going to sell off this asset in the market, when you are going to sell off this investment in the market, and why are you going to sell it off? Because reason is clear, you are going to dissolve the firm. So obviously you have to sell all the assets. So obviously you will sell investments also. And while selling investments, it may happen that the investment is going to sell in the market at less than the book value. Then from where you are going to recover its loss? You are going to recover the loss from the IFF only. You got my point? Rather we assume this thing कि आप जब भी investment को market में sale करने जाएंगे ना, तो उस case में जो भी आपको cash realize होगा, like whatever cash you will realize after selling off that investment in the market, वो already एक loss पर ही sale की जाती है. Please make a note. Whatever investment you are selling off in the market, जो भी money आपके पास आई है, वो obviously वो investment हमेशा loss पर ही sale की गई. So in that case, from where are we recovering that loss? We are recovering that loss from IFF. Fine. So simply you have to transfer this IFF to realization account. See what is going to be the entry. entry would be IFF debited to realization account. IFF debited to realization account. You are going to transfer this IFF to realization account. And why on the credit side? This I can tell you, because funds they always have a credit balance. If I have to make their book value 0, then obviously I have to debit that IFF. You need to take only one thing in your, you need to keep only one thing in your mind, that whenever you sell off any investment, that investment is always, sold off at the, at a value which is less than the book value. So we have to recover the losses from somewhere. That's why that losses will always be recovered from IFF. That's why instead of giving it to the partners, we are just transferring it to the realization account. Now students, note down few things. It might not be there in your books. I don't think so any question of such sort is given in the book, but still you need to note it down. See, you have to transfer, apart from IFF, 2 more things are there which will not be distributed among the partners. They will simply be transferred to realization account. Number 1, IFF that we have discussed. Number 2 is provision for bad debts. And number 3 is provision for depreciation. Is it clear? Provision for depreciation and provision for doubtful debts will not be given to the partners. Rather, they will be transferred to the credit side of realization account, and we have to make their book value 0. Now let me tell you the reason why. Provision for depreciation, what it is? See, you are charging depreciation on a machinery. Now, instead of subtracting the book value of the depreciation, what are you doing in this case? You are simply transferring the money to provision for depreciation account. I hope that you remember this concept you have already done in class 11, students. If you are maintaining provision for depreciation account, it simply means that the assets which are showing in the balance sheet, that assets are at its gross value. Gross value means you haven't subtracted depreciation from it yet. Instead of subtracting the depreciation year by year, what are you doing? जितना भी उस पर depreciation लगता था, वो depreciation आप provision for depreciation account में transfer करते थे. Fine. Now, अब जब आप उस asset को market में sale करने के लिए जाएंगे, तो क्या होगा? जितनी उसकी market value होगी, जितनी उस asset की book value होगी, सबसे पहले आप subtract करेंगे उस पर जितना provision for depreciation है. And provision for depreciation is nothing else but the sum total of depreciation which you have charged on that asset for years, right? तो आपने क्या किया? उस मशीनरी में से पहले आपने depreciation charge किया, फिर जो आपका वैल्यू बचता है फिर आप कंपेयर करते हैं कि आपका एसेट मार्केट में उस वैल्यू पर ये सेल है या उस वैल्यू से कम पर सेल हुआ. लेट मी टेक वन एग्जांपल. Suppose, just assume that in place of goodwill, let me write here. Let's say here is machinery rupees 5 lakh. You have been using this machinery for about, let's say, you have used this machinery for about 5 years in your company. Fine. And you have maintained an account here, provision for depreciation. Let's say it is 1 lakh. Now, if I am maintaining provision for depreciation account, it means that I have not subtracted depreciation from this machinery yet. This machinery, this is the original cost of the machinery. 5 lakh is the value at which we have purchased the machinery. We haven't subtracted this depreciation yet. But depreciation will be charged on this machinery because the value of every fixed asset decreases with the passage of time and usage. It means logically, before selling off this machinery in the market, I should subtract this depreciation. Suppose now I am going to sell off this asset in the market as I am going to dissolve the firm. So 5 lakh minus 1 lakh is 4 lakh, correct? Now the 4 lakh is the book value. 5 lakh is the historical value or the original cost at which you have purchased the machinery. but the actual book value is 4 lakh because after using this machinery for 5 years, the value has been decreased by rupees 1 lakh. So actual book value is 4 lakh now. So it means now suppose if you are going to sell up this asset in the market, a customer is there or a person is there who is ready to give you only rupees 3,20,000. So it means you have incurred a loss of rupees 80,000. Now just check. You have already subtracted this depreciation from this machinery, right? आप इस provision को इस machinery से already subtract कर चुके हैं. It means अब यहाँ पे balance तो कुछ रह नहीं गया. So it means ultimately what we should do now, we should eliminate this account from our books. That's why we have passed the entry provision for depreciation account related to realization. This provision will not be available to the partners and they can't distribute this money among themselves. I hope I have explained you the logic very clearly that the value of the machinery is rupees 5 lakh, which is the original cost. The total depreciation charge on this machinery is rupees 1 lakh. So now the book value is 4 lakh. As we have subtracted this, like the depreciation of rupees 1 lakh, obviously now no money is left in this account. So ultimately we have to eliminate this account from our books of accounts. That's why we have to pass the entry provision for depreciation to realization. And the third was provision for doubtful debts, as I told you. See, doubtful debts means when you aren't sure that whether you are going to get the money or not. So it's a kind of specific provision, right? It's a kind of specific reserve and it can be only used for the purpose for which it is being created. That's why it can't be distributed among old partners in their old ratio. So I hope now things are clear to you. We have to distribute general reserve to old partners old ratio. We have to distribute reserve fund. We have to distribute profit and loss account to old partners in their old ratio. But employees provident fund will not be distributed. As it is an outside liability, entry you can see very well. It is provident fund account debited to realization. Next is workmen compensation fund. It will be distributed to the employees in their ratio. Then next comes IFF. As I told you, it will only be transferred to realization account. That's all. Nothing else you have to do. And apart from IFF, it is provision for bad debts and it is provision for depreciation, which will be transferred to realization account. We are not going to distribute it among the partners in their old ratio. Come now to the asset side. First is profit and loss account. Now if profit and loss account is on the asset side of a balance sheet, it is a loss. So it will be transferred to partners capital account. Advertisement suspense account is a kind of fictitious asset. So it will also be transferred to partners capital account. Deferred advertisement expenditure is also a kind of fictitious asset. So it will also be transferred to partners capital account. An entry you know very well, as these are losses. So partners capital account will be debited. Let's say there are two partners. So entry will be A's capital account debit, B's capital account debit, to profit and loss account, to advertisement suspense account. This way you have to pass the entries. I hope the concept of the treatment of reserves and profits is clear to you. Now I'm going to take up the next concept, that is like the treatment of workmen compensation fund. Though it is same that we have to transfer it to the old partners capital account only, but at times some adjustments come. Fine, some adjustments you may find in your books. So we'll be discussing about it now. I hope the other terms are clear to you. Now let us start with the concept of workmen compensation reserve. This is one of the most important adjustment which is surely going to come in the exams. I'm talking about board exams. Fine, it is surely going to come. Workmen compensation reserve, meaning you know very well that if any worker gets injured while working in the factory or your office, then obviously the company needs to pay some compensation to him. So for that we have created a reserve known as Workmen Compensation Reserve. Now there are three different cases. You know very well, if there is no claim in the question, what did you do in admission or retirement? You simply transferred the whole amount of reserve to partners capital account and you pass the entry Workmen Compensation Reserve account debited to partners capital account. Now see, in case of dissolution, if there are three different situations given to you. First situation is Workmen Compensation Reserve is 20,000 and the claim is 8,000 only. It means out of 20,000 we have to pay only 8,000 to any worker. So in that case you are going to transfer the amount from Workmen Compensation Reserve to realization. But how much? Only rupees 8,000 because your claim is of rupees 8,000. After shifting the amount to realization account, we have to make payment of this liability and entry would be realization account debited to bank account 8,000, 8,000. Please don't pass the entry Workmen Compensation Reserve to bank account. Fine. Why can't we do this? Because we are going to dissolve the firm now and all the expenses should be met through a nominal account only. And Workmen Compensation Reserve is not a nominal account. It's a part of profit, you may say. So we can't pass this entry like that. So it's always better to pass two different entries. Workmen Compensation to realization. First of all, transfer it here and then pass the entry realization to bank. Now you can see out of 20,000, 8,000 we have given to our workers. So how much is left for the partners? It is only rupees 12,000. So this 12,000 will be distributed among the partners or between the partners as the case may be in their old ratio. I'm assuming that old ratio is equal. So I have distributed the reserve equally between A and B. This is the first case. Come to the second case now. Second case is if Workmen Compensation Reserve is 20,000 and the claim is also 20,000. It means the entire reserve will be given to an employee. Nothing will be left for the partners. So first of all, you have to transfer the whole amount of reserve to realization account. You have passed the entry WCR debited to realization 20,000, 20,000. And then pass the entry realization account debited to bank account. This entry shows that we have made the payment for the claim. And this entry shows that we have transferred the required amount of money to realization account so that the concerned expense can be paid off. Third case, when Workmen Compensation Reserve is 20,000 and the claim is 30,000. Now, again in this question also, the claim is more than the amount of Workmen Compensation Reserve. It means nothing will be left for the partners. So first of all, we have to transfer the whole amount of reserve to realization account, WCR debited to realization account. And then pass the entry for the payment of this claim, and entry would be realization account debited to bank account. So have a look on these three cases, try to differentiate them. If no claim is given, then only this entry will be passed, Workmen Compensation Reserve to A to B, and the full amount of reserve will be given to the partners. If there is a claim which is equal to the amount of reserve, then you have to pass two entries. First of all, transfer the amount of reserve to realization and then make the entry for the payment of the claim. In case if your claim is less than your reserve, then first of all transfer the required amount of claim from WCR to realization. Fine. Entry would be WCR debited to realization 8,000 only, because here the claim is of 8,000 and left over 12,000 will be given to the old partners in their old ratio. In last case, if the reserve is less than the amount of claim or claim is more than the amount of reserve, then again in this case also nothing will be left for the partners. So distribute or transfer the whole amount of Workmen Compensation Reserve to realization account and then pass the entry realization account debited to bank account with the amount of claim 30,000, 30,000. I hope this concept is clear to you. Now we are going to start with the next topic, that is the treatment of partner's loan if it is given to you in the question. Yes students, now come to the concept of loan account. See what I have written on the board, that is A and B are partners, fine, and A has given a loan to a firm, fine, and B has taken a loan from the firm. You need to understand this thing. If the loan is on the liability side of the balance sheet, it means that the partner has given loan to the firm, and we are making here firm's accounts only. That's why the loan which is given by a partner to a firm is a liability. Got it? And but it is not an outside liability because A is a partner. That's why I haven't transferred this partner's loan account to the realization account. Got it? Because A is a partner, so whatever money he advanced to the firm is undoubtedly a liability, but it is not a third party liability. That's why this loan was not transferred to realization account. Instead, what we have to do, after making realization account, you need to make separate A's loan account here. You need to make separate A's loan account. Transfer the amount of loan to his account. You write by balance brought down. Amount is 40,000. And then you have to make payment of this loan. So you will be passing the entries. A's loan account debited to bank account. And loan account is done. That's all. This is the only treatment. If A has given a loan, it is not an outside party liability. That's why we have to make a separate loan account for the partner. This is the amount of loan which he has given to us. It is on the credit side because all the liabilities are having credit balances. Now we are going to make the payment for this loan. So we will be passing the entries A's loan account debited to bank account. Now come to the other side. What you can notice that B is also a partner and his loan account is showing on the asset side. What does it mean? It means that B has taken loan from the firm. Means firm has given loan to B. So what are we going to do in this case? We are not going to open a separate B's loan account. Loan account will be opened only in the case when that loan is a liability for the firm. In this case, this loan is an asset for the firm because the firm has given the loan. In this case, the firm has taken loan from A. In this case, the firm has given loan to B. So instead of opening one separate loan account, what are we going to do? We are simply going to transfer this loan to B's capital. What are we going to do? We are going to transfer this loan to B's capital. An entry would be B's capital account debited to B's loan account. You can understand the meaning of this entry very easily, girls. See, you know this thing very well that B is a partner, and when the firm is going to dissolve, obviously A and B, they both will get some money from the business. And why are they going to get? Because they have invested capital. So now at least they are at least they expect that when business gets dissolved, at least they should get their capital back. No? But at times what happen that उनका claim कभी ज़्यादा भी हो जाता है partners का claim कभी कम भी हो जाता है. Are you getting my point? Like suppose if any partner pay off a liability, तो हम एंट्री पास करते हैं ना, realization account debited to A's capital account. In that case, what will happen? A will ask for the capital along with the money which he had paid on the behalf of the firm. It means A's claim will increase. Now in this case, we have to return capital to B, no doubt. But remember one thing, B has already taken rupees 50,000 from the firm. So what firm will do? Firm will subtract this 50,000 from his total claim. Firm will tell him that you have already taken rupees 50,000 from us. So now no doubt we have to return you the capital, but we will not return this 50,000. रीजन बिकॉज बी ने फर्म को ये मनी पे ऑफ करनी है, राइट? तो फर्म कहता है आप हमें दीजिए, लेकिन हम आपको आपका जो क्लेम बनता है फर्म में, आपकी जो कैपिटल बनती है उस कैपिटल को 50,000 से रिड्यूस कर देते हैं. So this is going to be the entry. B's loan, if on the asset side, has a debit balance. Credit हुआ, it means B's loan account has been closed now. And now, as I told you that the B is going to get lesser amount of the capital. Why? Because firm said कि हमने इसे mutually decide कर लिया, mutually हमने agreement बना लिया कि ultimately what is going to happen later on. First of all, B will make payment to firm, and then again firm will make payment to B. तो उन्होंने क्या बोला कि आप ऐसा कीजिए, आप डायरेक्टली इस मनी को, मेरे लोन को आप मेरी कैपिटल से सब्ट्रैक्ट कर दीजिए एंड देन गिव मी लेसर क्लेम. सो एंट्री इज बीज कैपिटल अकाउंट डेबिटेड टू बीज लोन अकाउंट. आई होप इट्स क्लियर. आई कैन गिव वन मोर एग्जांपल. इफ यू से सपोज बीज कैपिटल इज रुपीज 10 lakh in the firm. Obviously when firm will dissolve, the partnership firm has to give this 10 lakh to the partner. उसे pay off तो करना है, we have to make this payment to him. But now in this case, B has taken the loan from the firm. Now it means B will make the payment of this 50,000 to firm, and firm will make payment of rupees 10 lakh to B. So in short, firm will make payment of rupees 9,50,000 to B only, right? So for this, I have passed this entry, B's capital to B's loan. I hope now this thing is clear to you all. Now students, just note down some important tips which you should know. First is, as I told you that investment fluctuation fund will be transferred to realization account as we discussed, right? But it will be transferred to realization account only and only when investment is appearing on the asset side. Means, like suppose if IFF is given to you here and investments are given to you on the asset side, then only you are going to transfer this IFF to realization. If investments are not given, still IFF is there in the question, then this IFF will be transferred to old partners in their old ratio. It means in that case, we'll be transferring the IFF to partners capital account. Please do make a note. If investments are given on the asset side of the balance sheet, only then this IFF will be transferred to realization. If investments are not given, then in that case, this IFF will be transferred to partners capital account. An entry will be IFF debited to A, to B or to C. How, like as many partners are there, we are going to distribute this IFF among them. But if investments are there in the question, then in that case, you have to transfer this IFF to realization account. Last of all, see, if goodwill is given in the question, then obviously you are treating it as other assets and you are transferring it to the debit side of realization account. You are doing that. But suppose if nothing is mentioned in the question, that how much you have got after selling off that goodwill in the market, then you don't have to pass any entry for that. आप ये मान के चलेंगे कि goodwill से आपको कुछ भी realize नहीं. It means if goodwill is given to you on the asset side of the balance sheet, then you are going to pass the entry realization to goodwill. But कैश टू रियलाइजेशन जो एंट्री होगा, जो गुडविल को सेल ऑफ करके जो मनी रिसीव होगा, जो उस एंट्री की मैं बात कर रही हूँ, वो एंट्री तभी पास होगी जब आपको क्वेश्चन में मेंशन है कि आफ्टर सेलिंग ऑफ द गुडविल यू हैव गॉट सम मनी. इफ नथिंग इज मेंशन्ड इन द क्वेश्चन, इट सिंपली मीन्स दैट गुडविल हैज नॉट रियलाइज्ड एनीथिंग. Means we have not got any money after selling off the goodwill in the market. So only these 2 points you have to note down. If IFF is there and investment is also there, then transfer this IFF to realization. But if investment is not there, then transfer this IFF to partners capital account. Got it? And this is the concept of loan account. If A is loan, partner's loan is on liability side, it means firm has taken the loan, then you have to draw a separate loan account. But in case if B's loan account is on the asset side, then you need to understand that the partner has taken loan from the firm. And obviously partner is going to repay that loan. So instead of making a separate loan account, what are we going to do? We are going to transfer this loan to his capital, means we are going to decrease his capital by rupees 50,000, and now he will get lesser claim, because we have given one advantage to be that instead of refunding this money to the firm, we are going to reduce your claim. We are going to reduce your capital by the same amount, because ultimately the firm has to give this capital to the partner. So I hope all the basic concepts are clear to you now. We have done like the concepts related to realization or the reserves and the losses, profits, whatever. These are just basic concepts. Now let us start with the full-fledged question.